Hi friends, welcome back. So our topic is deferred tax revenue, deferred tax assets, and deferred tax liability. Okay, we'll go through it. See, one of my friends suggested that buy one mic and don't be wide in talking like a huge volume. So I'm taking his suggestions. Now I will talk slowly and I will purchase mic. But the mic is like here somewhat little bit costly. I'll see. I'll purchase definitely. We'll see. Another couple of days I'll purchase within week or some days like that. So first time what I'm doing, I'm going for a deferred tax asset. Okay, okay. I came it. See what is meant by deferred tax asset? The deferred tax asset is the opposite of deferred tax liability. See what is deferred tax asset means what? The deferred tax asset means how I can say it is a balance sheet item. The asset which is generated sorry, I'm very sorry. See, you're very, I wear not that time it is getting hot, till the time no hot, that's why I will turn on everything. Don't see, I'm not for showcasing something, just somewhat hot getting, and that's why I turned on actually. So that means deferred tax asset means what? It is opposite word to deferred tax liability, which indicates expected increase in the amount of income tax owed by company. See, suppose a company while paying income tax, what happened, you know? How income tax paying time, what happened? We are paying some advance payments, you know, right? Something income tax advance payment you are paying. You are paying now 2 lakhs, 3 lakhs India companies. You may be working in Indian domestic companies, you will maybe come to know. Huh? So we are paying. That time what will happen? Mm, expected increase. Expected decrease actually. If income tax is decreased, it means then we'll pay less. Already advance amount, already we have paid advance, no? Then it will get decreased. And key takeaways means main points. Okay, we'll go through it. Deferred tax asset is an item on the balance sheet that results from an overpayment of or advance payment of taxes. I said no. The asset which is shown on the balance sheet that results from overpayment to or advance payment of taxes. Okay, then it is opposite to deferred tax liability. Deferred tax liability, when it will appear, when you are paying less income tax, nothing, not making provisions correctly on monthly basis income tax, then you will get it liability. That's why provision is very important thing. Provision, that's why I will go through it all now. A deferred tax asset usually is found when there are a difference between tax rules and accounting rules. Tax rules and accounting rules. If you are following something IFRS, GAAP, US GAAP, something, so many gaps is there, formulas. So that time maybe if you are following something here and there formulas, if you maybe your accountant will not do correctly, something will happen somewhere, not accountant something tax rules based on tax rules. If some suddenly they have changed government, then it will affect. Then it also occurs carryover of tax losses. Tax losses means what? I don't know. I don't know this point. I will agree. Beginning in 2018, most companies could carry over deferred tax asset indefinitely. In most cases, they cannot be applied to tax filings in the past. See, from 2018 onwards, it's applicable, it seems. Before, I don't know whether it is working or I don't know. We don't know. We need to see. I never worked the first time. See, in fact, I never worked for deferred tax asset. Simple. I just analyzing, telling. If anything wrong is there, you can beat me, you can scold me, you can put personal message. You stupid idiot, genius, Indian rascal. Why you are doing like this? You can scold me. No problem for me. I am giving 100% subject. I am reviewing 100,000 times my videos. Okay. If you are judging me as no problem, if you judge me, no problem. I will take it. Your all suggestions always welcome. Understanding deferred tax assets. A deferred tax asset which is often created when taxes are paid or carry forward but cannot be It be recognized on the company's income statement. See, the deferred tax asset GL will be in the TB balance also it will be there GL. That only will carry forward to balance sheet. Okay. For example, deferred tax assets can be created when tax authorities recognize revenue or expenses at different times than periods that the company follows accounting standards. See, while what happened, see, big companies, what they will do, Google and all, they will appoint some persons like big Deloitte and some other Deloitte company. Another top big four is there, na? Deloitte, PwC. Ah, see, nothing rocket science. These companies, they're paying to Google and all, they're paying to these people only appointed as auditors. You know. See, please, I'm requesting, I'm touching your feet. Please follow me my videos. I'm not coming for time passing or something. I have content. Please. Okay. This video 15 minutes to go. See, for example, deferred tax asset can be created when authorities recognize revenue. Tax authorities not this only. Right? PwC companies, they will come and do it for Google. Google also don't know. Nothing Google. And expenses different types than the period that the company follows accounting standard. These assets help reduce company's future tax liability. These assets, see what happened once this filing done, annual audit, something all done, audit done, means what happened, they will tell to pass one entry, we will pass it actually, the accountant will pass, not I didn't pass, I never passed. I'm just analyzing, telling. You can think about my thing. And it is important to note that deferred tax asset is recognized only when the difference between loss value or depreciation of an asset expected to be offset in the future profit. Leave it, this is not required. A deferred tax asset might be compared to rent paid in advance, refundable insurance premium. See, it is not about only taxes, it is applicable for rent paid, advance, anything advance you will pay, if it will be lying in prepaid, this tax asset will be generating. See, I'm not checking anything. See, just to Google Investopedia. From Investopedia, I'm just analyzing and telling. That's all. Nothing. I'm just educating. If they put copy mark also, nothing problem for me. I'm just educating people. Investopedia, you can go and check it. Examples of deferred tax assets. One straightforward example of deferred tax asset is the carryover of losses. Losses or a profit, whatever. If business incurs losses in financial year, it usually entitled to use that loss to lower its taxable income the following years. Okay. Maybe if we are creating some provision for making pay income tax payment, but what happened if business goes loss, then maybe deferred tax asset will maybe generating maybe because we already paid, but we got loss. Then that time we don't need to pay tax. Maybe don't know. I never worked. I just came 6 months only here. I grabbed it at least this much. Please don't judge me more. But your suggestions are welcome. So always welcome. See, all if you tell it will take time. How to calculate deferred tax rate or revenue or taxable income or taxable payable or net income. Okay, like that. You can check it in Google. Calculation and all I don't know. I'm just explaining subject only. Still I never worked. If I worked, I can give you. Okay, please. At least we can answer interview. What is deferred tax revenue asset or liability? We can tell. Okay. Special considerations, it seems. There are some key characteristics of deferred tax assets to consider. First, starting in the 2018 tax year, 2018 onwards it started. So they could be carry forward definitely. See, it is like a YTD. We can carry forward to current year based on last of years, couple of years, prior periods also, but are no longer able to carry it back. We cannot shift to previous year and we can show it in audit times. We need to carry forward only, not carry back. The second thing considered to be how tax rate affect the value of deferred tax assets. If the tax rate goes up, it works company favor because the asset value goes up, but it provides a bigger cushion for a larger income. But if the tax rate drops, tax rate value will declines. Also declines. Okay, see, if tax you already paid, maybe advance. If income tax rate increase means company favor, maybe don't know, not sure this one. But tax rate drops means asset value also decreases, it seems, because we paid less, na, that's why. Huh? This means that company may not able to use the whole benefit before tax deadline. Why do deferred tax asset occur? Why do deferred tax asset occur means a balance sheet may reflect deferred tax asset if a company has prepaid its taxes. Prepaid means if prepaid taxes means it will appear. Otherwise it will not created. See, somebody will pass entry deferred tax asset, it will not come automatically in books of accounts. And company, see, it is all Google also same. You check it with another people if you are watching big intellectual. And it also may simply occur company pays tax at that time, tax at credit, or the company may have overpaid its taxes. In such cases, companies need to reflect tax paid in company or money due to it. Due to it. Do deferred tax assets carry forward? Yes, we can carry forward deferred tax asset. Once we created after filing from after audit done something, they will give us for financial approvals. After processing, we can pass that entry. Because I never worked, I'm just analyzing, telling. I know the subject. That's why I'm telling this much confidently. They never expire and companies use them when it most beneficial to do so. Whenever they can use long time, irrespective of company dates and all, they can transfer to another group also within group. I don't know. Need to work. What is the difference between tax asset, deferred tax asset versus deferred tax liability? Deferred tax asset represents the financial benefit, while deferred tax liability indicates future tax obligation. I told na, because maybe they paid less tax. It will be applicable, so it will come liability side. Deferred tax asset means it will come asset side. That's all. Nothing. For example, retirement savers, traditional 401 plans make contribution to their accounts using pre-tax income. When money usually withdrawn, income tax due on the contribution, that is deferred tax liability. Nothing. Bottom line, deferred tax asset is the related to overpayment or advance payment of taxes. This is only bottom line. It will appear when company overpayment or short payment, advance payment or overpayment, not short payment. Whether you need to pay it advance payment before filing tax audit and everything. Then this occurs when there is a difference between when tax authority recognize revenue. Deloitte and these companies will do for Google na, that time. And recognize revenue when company does based on accounting standards that latter follows. It may be happen because current loss can be forward and reduce company's future tax liability. If you loss coming, maybe company, they no need to pay tax. No need to pay, right? Company loss coming means no need to pay. That's all. Deferred tax versus deferred tax liability. It will show on balance sheet. Deferred tax asset means which is generated from irrespective of overpayment or advance payment of income tax or some other rent, prepaid rentals, prepaid insurance claim. So many things is there. Whatever is there, prepaid things we can create it and we can create it and we can create under we can create as a deferred tax asset. While you have paid more tax, overpayment tax than advance payment. But deferred tax liability when occurs if you provision not passed correctly, then deferred tax liability will appear. Okay, it is already 13 minutes video. We're going to upload it. See, please follow me. I'm working like anything. I'm working for you. Please follow me. I will give subject. Please. My voice is loud. Voice loud means why? Because I'm motivating myself. My voice is getting low means maybe I'm not able to give subject. That's why my voice sometimes lower coming. Please, please watch it. I'm requesting you, all people. See, don't know this world is big world. You don't know anything. Once I came to abroad, I came to know all things. See, still, I never done for tax audit, statutory audit, interim audit, so many audits. But still, I know everything because I'm a commerce student. I have good percentage in my plus two and this one, so I know everything now. I can tell you about now plus two subjects also. I can teach you everything. I can prepare final accounts, so partnership accounts, so balance sheets, so income statement, all not rate income, this, that, all I can tell. I can tell everything, anything I can tell you. Okay, bye. No signing up today. I'll give you subjects one by one by one. Watch it and rate. Thank you so much. Bye bye. You don't think that it is not useful for you. Someday somebody can ask you this question. Okay, interview. Please make sure it. Watch it and enjoy it. Please, friends. I'm doing for you people. You help me. That's why I'm doing. Watch it and please help it. Help me. Help me. Help me. Not help me. Watch it. Just that's all. You're watching this. Okay, fine. Thank you so much. It's up to you now. I'm not forcing.